Hello, my name's Andy Thorburn. I'm the CEO of EMIS Group, and I'm joined today by Peter Southby, our CFO, and we're delighted to be announcing the H1 2022 results. Peter will take you through the detailed financials as normal, and then I'll give you an update on the proposed transaction relating to EMIS Group and also the operational highlights for the period. Peter, over to you.
Thank you, Andy, and good morning, everybody. So starting with the financial highlights for the first half of the year. First half of 2022 saw a good performance by the business reflected in these highlights. All the key P&L and cash flow metrics, including revenue, recurring revenue, adjusted operating profit, cash generation and EPS, moved ahead against the first half of 2021. Total revenue was up 5% to 87.3 million, with recurring revenue up 9% to 71.8 million. Group operating profit improved by 12% on headline adjusted numbers, which for a reminder is where we expense development costs as incurred. Cash generation returned to the usual strong performance, with the weaker comparative period affected by one-off adverse working capital movements. The business generated 27.4 million from operations, enabling an increase in net cash of 12% over the position a year ago, despite significant acquisition investment over that time. Adjusted EPS was 14% higher at 29.1 pence, with the interim dividend unchanged at 17.6 pence, as agreed further to the proposed acquisition of the group. This dividend will be paid on the 3rd of November to shareholders on the register at the close of business on the 7th of October. This slide shows the P&L performance over the past 3 half years. There's more on revenue and segmental performance in a moment, but we're pleased with the results this period as we've balanced strong underlying organic growth with the benefit of 2 acquisitions, Edenbridge and 14 Fish, which together added 1.6 million in revenue and a few £100,000 in profit in the period. While continuing our technology investment programme, the level of capitalisation of development costs continued to be slightly exceeded by the level of amortisation. We also took 2 exceptional items in the period relating to corporate transaction costs and to change costs associated with our technology transformation programme. As a result, reported profit was lower this time. The tax charge in 2022 is in line with the average statutory rate for the period at 19%, and adjusted EPS, which excludes exceptionals, capitalised development costs and amortisation, was up 14%. Reported EPS, following the reported profit, was slightly lower this time. Looking at our 2 business segments, the 3 left-hand columns show the performance of EMIS Health, which provides core software to the NHS. Here, revenue dipped a little as expected, with lower hardware sales and a planned reduction in lower margin resale partner activities. The richer sales mix and continued focus on cost nonetheless resulted in an unchanged level of adjusted operating profit. In the EMIS Enterprise segment in the 3 middle columns, covering largely the private sector and consumer side of what we do, we saw strong growth in analytics and partners, boosted by the acquisitions. Revenue was up by 23% and adjusted operating profit by 28%. Overall, therefore, adjusted operating profit was 12% higher, with the operating margin also up by 170 basis points versus the comparative period. This table shows a split of the revenues between the main revenue categories and between recurring and non-recurring. As we've seen, recurring revenue moved forwards by 9% this time versus half 1 last year, helped by the acquisitions. Non-recurring revenues dropped back a little, with hardware and some one-off resale partner activities at a lower level. Software subscription and support ticked up with business growth and the acquisitions. Interface and connectivity charges, which includes partner revenues, increased with higher onboarding revenues. Other services were also up, mainly due to higher analytics revenues. Hardware and related services dropped back with the planned reduction in resale partner activities. And perpetual licenses, training, consultancy and implementation, all non-recurring revenues, were lower with a reduction in setup revenues associated with supporting the COVID-19 vaccination programme. Looking at cash flow, adjusted cash from operations, which is before any exceptionals, but having absorbed all development costs, returned to its usual strong level at 27.4 million, following a weaker comparative period affected by one-off adverse working capital movements. Business combinations here includes the 18.4 million consideration for the 2 deals completed in the period, and the final 2 million deferred contingent consideration for the Pinnacle acquisition. CapEx continued to be tightly controlled at 1.3 million this time, with other cash items broadly consistent with previous periods. Overall, therefore, we reported a net cash balance of 53.6 million, a 12% increase on a year ago. Our balance sheet remains strong with no debt and unused facilities in place to December 2024. The acquisitions have resulted in increases in goodwill and acquired intangible assets, as you would expect. The increase in joint venture associate and current assets versus last year end is the usual seasonality, supplemented with new acquisition balances, but is unchanged against H1 2021, while there's been an increase in the related deferred income balance, so overall working capital has improved a little. Within other financial liabilities, there's the further 6.2 million contingent consideration for the acquisitions, which is payable over the next couple of years, including 1.8 million already paid out since the half year. And that concludes the financial review, so I'll pass back to Andy, who'll take you through the operational review.
Thank you, Peter. Let me update you on the proposed transaction for EMIS to be acquired by Bordeaux Holdings II, an affiliate of Optum UK, a division of United Health Group. The agreement. So each EMIS shareholder will be entitled to receive £19.25 in cash per share. The acquisition values the share capital of EMIS at approximately £1.243 billion and represents a premium of approximately 49% to the undisturbed share price. This also represents a 32% premium, or an uplift of £4.65 per share, to our all-time high closing price of 14.60 per EMIS share back in September 2021. In terms of the transaction, it will give the parties an opportunity to, firstly, help the NHS improve patient care and experience by providing clinicians with innovative and improved data and technology tools to provide better and more effective care to the populations they serve. Secondly, it will allow the parties to become a stronger and more capable organisation that can support the delivery of key elements of the NHS long-term plan in order to deliver the best possible standard of care to patients in the UK. Thirdly, it will enable EMIS to grow its business in the UK as a result of the combination and accelerated investment in innovation from Optum UK. It's also good for our EMIS team, who will benefit from being part of the larger group with the associated opportunities this is likely to present. Turning now to the closing progress to date. We are delighted that the deal was overwhelmingly supported by our shareholders at the relevant meetings in August, with over 99.5% of votes cast in favour of the transaction. We're also pleased to report we have received clearance relating to the National Security and Investment Act. We're working on completing the other conditions in the agreement, including clearance from the Competition Markets Authority, with expected close by the end of Q4. Finally, as Peter already highlighted, we're delighted to confirm the dividend will be 17.6 paid in November, which was something we agreed as part of the deal. In summary, we're making good progress with the transaction. The recommended acquisition is a good opportunity for all stakeholders, good for staff and good for our ability to continue supporting the NHS, enabling EMIS to grow its business in the UK through accelerated investment and innovation. If we now move on to the operational highlights, I'd like to just thank, first of all, the EMIS team, our customers and our partners for supporting the business through H1 2022. The group continues to perform well with good visibility and high levels of recurring revenue. We were particularly pleased with moving our recurring revenue to 82% in the period, as Peter outlined. We continue to work with our NHS customers with our strong relationships, and we're looking to accelerate investment in technology and cloud refresh strategy in EMIS Health, again as highlighted by Peter. EMIS Enterprise continues to go from strength to strength with Pinnacle, Edenbridge and 14 Fish all contributing well in H1, and we expect more from all of those acquisitions as we move forward. We're also pleased to report a strong underlying growth from EMIS Analytics as we continue to invest as part of our EMIS overall program. So turning to the outlook, we're focused on delivering consistent revenue growth in line with our business plan, and the group remains well placed for growth with a technology strategy that is in alignment with NHS policy. So in summary, good progress from the group through H1 as detailed in the results, and we remain focused on delivering the full year for financial year 2022, as well as focusing on completing the outstanding conditions on the transaction. Thanks very much for tuning in to this video. It's much appreciated. Thank you.